Welcome everyone, I'm Robert Green, CPA and CEO of GreenTraderTax and managing member of Green NFH and Green Trader Funds. And I'm joined today by our sponsor from MarketTaker.com, the famous Dan Passarelli. And Dan, thank you so much for inviting your users. It's been nice to be speaking with you and working with you. And today's class is Taxes for Options Traders, which is just what Dan teaches, people how to trade options. Now, Dan, one of the things that we specialize in is business tax breaks and elections for traders, and only traders who trade frequently qualify for those breaks. There's also a whole bunch of tax benefits and tax challenges for what you trade, including all sorts of options, and we're going to cover that. But right off the bat, Dan, do you think that the way you teach trading might qualify for trader tax status business treatment? We're looking for 500 round-trip trades a year, trades on 4 days a week, and several hours a day. It can be a little less for an options trader, but if an options trader is just bunching trades around expiration dates and having 5 to 10 trades a month, they may not qualify. Which is it that you generally teach? The more active or the less active?
One of the strengths I think about, my school is that I've got something for everyone. One of the things that I tell traders is, hey, trading is personal. You put 100 traders in a room, everybody trades differently. So I've got some classes out there for the very casual trader who's just sort of augmenting their long-term investments. They'll make 5 trades a month. And then I have some classes, like my one-on-one coaching and my group coaching, for traders who are going to go way beyond what you're talking about. So I'm both ends of the spectrum.
Now, Dan, we noticed that some options traders also may day trade stocks with much less risk. Sometimes they do it just to get the status. I never advocate having the tax tail wag the dog, but it's interesting that you teach different ways to do it, because I have found in the last few years that options traders tend to be pretty successful. Of course, a lot of traders lose money too, and trading very frequently is not the answer. The answer is to trade smartly with good strategies. But on the other hand, if you're just going to collect income, with options and put on very few trades, it's more challenging. And we're going to cover that today. Was there anything else, Dan, that you can think about that you wanted to ask me about as a key tax thing that you want us to cover today?
No, I was looking over the agenda and what you're going to be talking about, and boy, oh boy, I bet you could do a full day class at least on all the tax issues there are to talk about, but I think the things you're going to talk about today are really, really exciting and useful for a lot of traders, and I'm looking forward just to listening myself.
Well, great, Dan. Thank you so much. So I'm just going to jump into the PowerPoint now. I really appreciate working with you on this. So thank you again as a sponsor. And we will have the recording up tonight. For those who don't know my bio, I just went over some of it. People say I'm the leading authority on trader tax. Hardcover book, McGraw-Hill. All our guides every year. I write for Active Trader magazine, Forbes blog, other places. You'll see us quoted in all the major media, covered on Barron's every year, and the main tax speaker at the Money Show and Traders Expo. So, Dan, I thank you for coming. I just put your mic on mute so there's no background noise. And if you want to jump in again, just let me know on chat or something. So thanks so much. I just, this way, keep the background noise down for the recording. All right, so options fall into different tax categories. And I did show the disclaimer before. This is educational. And Dan, our sponsor, is not giving tax advice. He gives the trading advice, which I don't give. And it's a combination of the two that leads to a successful business. So taxes are a big part of it. And if tax rates head up, it's an even bigger part of it. So here's the thing about options. They fall into different tax categories. If someone tells me, well, I trade stocks, well, that's in the securities category. If they tell me they trade futures, that's a 1256 contract. If they tell me they trade Forex, that's something else different. But if they say they trade options, they may fall into all these categories. Now, Dan's firm may focus on equity options, stock options, but there's all sorts of options. Dan, I'm going to take you off mute for a second if you're still with us here. Do you teach other types of options? What's the different types of options that you focus on, Dan?
Well, can you hear me right now?
Yes.
Well, I focus on equity options, ETF options, index options, and even talk a little bit about commodity options. So I'm kind of across the board.
Great. Well, that's what we're going to cover. Because people don't realize that they're in different major camps. And by the way, I see my partner, Darren Neuschwander, joined us as a panelist too, which is great because Darren heads up our tax production preparation, and he deals with our thousands of clients on tax prep, and I deal with those on consulting too. And these issues come up on their tax returns very often. So here are the major differences, and I'll keep everyone's mic live, so just jump in, guys, as you'd like as well. Securities are accounted for and taxed very differently from futures and other Section 1256 contracts. Section 1256 contracts are subject to mark-to-market accounting. It's automatic, realized and unrealized gains or losses at year end. So, Dan, if someone's got, let's say, a monthly option they're trading and it's open at year end, if it's a securities option, they're only paying taxes on the realized gain or loss. But if it's a 1256 contract, it's subject to mark-to-market, and they need to know that. Now, 1256 has some advantages. There are lower tax rates, the 60-40 tax rate. 60% is a long-term capital gain or loss, even on day trades. 40% is a short-term capital gain or loss. So the blended rate is the highest rate is 23%. The highest ordinary rate is 35%. That's 12% less, 1/3 off. So if you trade a 1256 option, what we call a non-equity option, and a lot of them are, you're going to get these lower tax rates. Now, your broker 1099 may not pick it up that way, like in the case of ETF options. And so you need to separate it out with our TradeLog software and then enter it on Form 6781 and list it out. And Darren can talk about that a little later. So you have to do some work. We're showing you where the gold mine is, but you got to go mine it. By the way, gold, precious metals are even treated differently from securities and futures. So options fall into all these categories. You need to understand what you're trading, how they're accounted for and reported on 1099s, how you're going to report them on the tax return, and what tax rates to use. Bottom line, if you can get lower 60-40 rates, why not save up to 12% off on your taxes? If it's not 60-40, you're not stuck with mark-to-market at year end, but then there could be wash sales. Futures brokers send you a futures 1099-B. Securities brokers send you a securities 1099-B, but that securities 1099-B may have some items that you can treat as 1256. Now, equity options, otherwise called stock options, they're derivatives on the underlying stock, and they're treated as securities. When in doubt, tax theory calls for the following. If it walks, talks, and acts like a stock, it could be treated like a stock if it's a derivative of a stock. Now, non-equity options are listed under Section 1256 contract rules. They include options on your broad-based indexes. Most indexes are broad-based. They're made up of 10 or more underlying securities, the S&P 100, 500, the Russell, the Dow. All those indexes, most of them are broad, And so they're 1256. Think of 1256 as kind of like a macro bet and equity kind of like a, single stock bet, and the option on it is a single, option on a stock bet. That's kind of a theory as well. So the name of the game is to what can we squeeze into that definition of non-equity option in 1256? Now, futures are 1256, and so are options on futures. So if it's an option on a 1256 contract, it's 1256. But there are some confusing things like ETF options. This is a big one. Although there is no guidance from the IRS, our tax attorneys consider most ETF options to qualify for Section 1256 treatment. Now, if that's the case, and we'll go through the rationale for that a little later in the PowerPoint, if that's the case, when you use Form 6781, it's summary reporting. But when you attach your ETF options, you'll list them line by line, the TradeLog report, if you have it, and you'll attach it to Form 6781. Now, if you trade Forex, that's off exchange. Dan, you're probably focused on exchange. Very few of our clients trade Forex options. Most people trade Forex spot. And Dan, I know a lot of exchange guys think that when you go into Forex, you're trading against the house and there's slippage, and they just prefer what's on exchange. Because there's currency options and there's currency futures on exchange, and those are 1256. Now, the new binary options, have you done anything with those, Dan? We've just looked at them, and we think they're 1256. Have you worked with them?
Binary options are not really something that I've done a lot with.
They're kind of new with the NADEX. It's something we'll keep an eye out for. We don't really work with it much either, but we did look at the taxes. Now, listen, this thing about the qualified covered call option is a big factor out there. It rarely comes up with us unless we're dealing with like a real big professional trader. And there are traders who have come to us with big questions on this, and these rules are really beyond the scope of today's presentation. Our tax attorney, Mark Feldman, is all over this. He's worked on a lot of memos about it. The tax rules for QCC are complex, and the IRS seeks to prevent tax arbitrage. The question that comes up for traders is, can option traders get lower long-term capital gains treatment on selling underlying stock, where meanwhile they've been trading deep in the money options around that stock, where they get short-term capital loss treatment on the deep in the money options? So they're basically kind of flat in risk, but they're getting long-term rates in exchange for short-term losses. You can bet smart guys in Chicago go for that. Well, the IRS rules for QCC are intended to prevent that type of tax arbitrage. It's similar in concept to the of straddles and offsetting positions, but it has special rules in effect. A covered call deep in the money option causes the covered call to be treated as part of a hedge with the underlying stock, preventing the tax arbitrage. Now, I have really good detailed examples of that, but it's beyond the scope of today's presentation. Dan, we can always do another webinar down the road where we get into some of these more in-depth strategies. Now,
sounds great.
But yeah, besides, and Darren, I won't even ask you about that yet if it comes up a lot, maybe a little later. Let's jump into this part now. Besides options being in different categories, and by the way, we're going to go into more detail about those categories. That's the big picture of what I call tax treatment. Is it security, ordinary gain, capital gain and loss? Is it futures? Is it Forex? Those is tax treatment, and there are elections and lots of things to do. But let's jump into this issue for a second, the trader tax status. We started the webinar on this when I asked Dan, are your traders trading frequently to qualify for trader tax status? A lot of clients come to us, they're looking for those tax breaks. That's when they got to go through Darren's operation on the tax prep to make sure they qualify. they may consult with me about it, but the proof is in the pudding. And we put them through a rigorous trader tax status analysis. And we have found that options traders have a harder time qualifying for trader tax status. It's not easy to qualify for trader tax status business treatment, which requires trading for many hours a day, almost every day the markets are open. Sure, you have vacations, personal time. Now, securities and futures day traders and even swing traders generally qualify for all the business tax breaks, especially if they're full-time, their intention is to run a business, and they're acting accordingly. But options traders face difficulty convincing the IRS they qualify too. Now, this is what I mentioned to Dan to start. We have a lot of executives who trade, and they're really smart, and they learn these option strategies from Dan. And they don't want to day trade every day, all day. They want to put on these great options trades, multi-legged positions, credit spreads, butterflies, iron condors, the works. They'll monitor them daily, but they're not going to work at their computer pushing the button to make trades all day long. They're going to go to work in Silicon Valley. So if they bunch options trades around monthly expirations, now more and more people are trading the weeklies now too, and that's better. And they only execute trades on 1 or 2 days per week, case law is not in their favor. Now, the IRS doesn't have a bright line test for trader tax status, so we resort to case law. One case that came up recently is the Holsinger versus Commissioner. That means IRS. And Holsinger had 160 round-trip trades 2 days a week. He was an early retiree, and the IRS said it wasn't enough. Now, the IRS heavily weights frequency of trades in assessing qualification for trader tax status. That means the volume of trades, average holding periods, and days per week with executions. The IRS likes it because that's a liar's test. They can prove it out. And taxpayers in the past have tried to bamboozle the tax court. So the IRS resorted to frequency of trades. And case law talks about 500 round-turn trades. That's 1,000 total trades. A buyer and a seller, 2 trades, 1 round trip. An expiration we count as the second part of a 1 round trip. Holding periods, swing trades are less than a week, but if you trade options, 30 days is okay. But Holsinger only had executions 2 days a week, and we want to see more than that. Now, we argued to the IRS for a California executive that they should also count unexecuted trades and days option positions are still on, and you service them, you monitor them, you try to tweak them. But we haven't gotten an answer from the IRS about unexecuted trades. What is good news is we're pushing the envelope now on continuous business activity, this next bullet point. We feel it compensates for less frequency of trades. That can include days with unexecuted trades where you're working on your trading activity even though you didn't make executions. But if you have a full-time job, the bar is higher. The IRS is more skeptical. So we really want you to hit our frequency of trades, but if you come up a little short, and for good reason, like an options trader, we'll fill in the blanks with continuous business activity, and each case is different. Now, we don't know if the IRS will count a spread trade as a single trade or every leg separately. We think there's reason to count each leg separately. Now, some traders come up short and they just have a lot of business expenses. In trader tax status, we're going to get to this in a few minutes, it can save the average trader $8,000 up to $20,000 a year by deducting business expenses rather than very restricted investment expenses, including home office, education, and the works, computers, monitors. So some traders really want those deductions, so they put on a few more trades, maybe with securities at lower risk. Again, don't have the tax tail wag the dog. Darren, why don't you jump in here before we go into a few other issues here. Do you see many of our options traders qualifying or not qualifying, or are many of them also day trading securities as well?
Well, Bob, it's a little bit of all three of what you just mentioned. A lot of our traders are actually actively trading options along with their security positions and options on exchange traded funds and futures as well. Where we get into some issues of an individual that's more just actively trading options alone, there is sometimes an issue overall with qualification for trader status just because of the lack of the overall volume in trading. As you were discussing, we just don't necessarily see the total number of trades, and also just the volume of trading on a daily basis throughout the year. As you mentioned, the Halsinger case, the IRS is really looking at daily trading activity. 500 round-trip trades can actually be made by somebody that really only trades 1 or 2 trading days throughout the month and then taking that on an annual basis. That's not necessarily qualifications for trader status, because you're not actually executing a trade on average for every day that the market was open. So as part of our qualification analysis, we would like to look at your number of trades that you made throughout the year, then how many days was the market actually opened, and from that, how many days did you actually execute a trade. And we like to see that last scenario actually around 75% of the days that the market was open. I'd like to see a trader making trades on 75% of the time, because that's just part of all of the different hurdles that someone has to actually achieve to qualify as a trader in the business. But as Bob's pointed out, I mean, the doors open up. I mean, once you reach that qualification, there's additional tax benefits for that. So everybody's facts and circumstances are different. We say it as an overall general situation. This is what we like to see as our golden rule. But when we really take you on as a client and we analyze your particular facts and situations, because you may actually have some health situations, or maybe there were some family situations that precluded you from actually being able to actively trade during a certain point in time. So even if you don't necessarily have what we say is our golden rule, still have a consultation with us and see if there's a possibility that you could still qualify as a trader.
Thanks, Darren. We have the golden rules on our website. We also have them in other webinars. We're not going to cover them today because we have a lot else to cover. This next issue is something that Darren and I have been working on a lot, this new Form 8949 cost basis reporting. I'm not going to deal with it too much here. Just going to say that when you trade equity options, that's a security. Then you're subject to wash sales. When you trade your 1256 options, which are your index options, your futures options, and in most cases ETF options, you're exempt from wash sales. But when you have wash sale reporting, it can be a nightmare with this new Form 8949. The brokers have really made life difficult for you in their quest to comply with the IRS rules, and they've worked hard at it. It's not all their fault. The rules are very detailed and misunderstood. So the bottom line is you get from your broker really big 1099-Bs. You have to report on 8949, new for this year, for covered securities. You have to report other things as well. You still have to report all your equity options. Now, equity options won't be covered until 2014. Originally, they were going to be phased in 2013. And so every year between now and then, it's going to be a nightmare with this Form 8949. The only solution is really to use our TradeLog software. I'm going to skip over these slides. I don't want to spend too much time on them today because we have a lot to cover, and we're pretty much moving along here in terms of time. Bottom line is if you're dealing with Form 8949, you need TradeLog software. You need to separate out your equity options versus your futures. It's no longer just reporting on Schedule D. Yes, you report futures on Form 6781, the second bullet point here, but otherwise you got to use 8949. Now, a lot of people are upset about that form. It's causing a bottleneck this year. If you are a business trader, you can elect 475 and not be subject to it. It's too late to elect as an individual, but you can form an entity. And by the way, entities don't file 8949. So you got to check out our TradeLog software and check out the webinar we did yesterday just on this issue. Let's get back to the matter at hand, the options and the accounting and dealing with it. Now, when something is a future, it's easy accounting, easy reporting generally. One thing that's not so easy is getting your money, like with PFG Best. There's no money protection insurance from the government. There is segregation, but we found out that that's not working so good, and hopefully that will all be drastically improved. But it is simple reporting. You get a 1099. The broker does the accounting for you. It's mark to market every day. You get a 1099 at year end, the aggregate profit or loss, you put it on Form 6781. It's easy. Forex, there should be no 1099, but again, it's like a statement in lieu of a 1099 with summary reporting. Trade accounting for securities is a challenge. Now, it's a challenge for options. In the past years, like in 2010 and prior years, your 1099 listed securities only, stocks, but they didn't list the options. Now, the supplemental information usually included a total for options purchases and options sales, but that was it. You were on your own, and you really need TradeLog software. Now, some of the other software out there, I won't mention names, they don't do wash sales between stocks and options, and a lot of clients do trade both stocks and options in the same symbol. They maybe hold Apple stock and they trade Apple options around it. So you really need TradeLog to do the wash sales right. And trade accounting is a responsibility of securities traders. That includes you stock options traders, equity options traders too. Now, while brokers added controversial cost basis reporting for 2011, it's still only partial reporting of cost basis, and most items are still not reported in detail in the 1099-B. Options don't get reported as covered securities until 2014. Now, what's important to understand is that when you get that 1099-B, it's prepared with different rules than what taxpayers must use. It's apples versus oranges. A lot of people jump to say, oh, my 1099-B is wrong. Well, Darren's the first guy to say, hey, wait a second. It may not be wrong. Maybe they're following their rules with the IRS, which are apples and oranges with taxpayer rules. That makes no sense. Brokers do wash sale reporting based on identical positions. That's just between two of the same symbols. But taxpayers need to report wash sales based on substantially identical positions. That means between the stock and the option. So you can see right there could be a huge gulf and a huge set of problems. If you work with us, if you work with our software, if you use our content, you'll get it right. So you need to do your own trade accounting with line-by-line reporting, or what's called trade-by-trade reporting, and it goes on Form 8949. Now, yes, you're going to have a problem reconciling to the 1099-B in most cases. Check our content on that. We have footnotes. We have guidance. Back to the TradeLog software. It's the best solution. It's a good solution for securities traders. It will do your wash sales across all accounts. Now, here's the thing. You run your trade log, and you're not running it on your futures accounts. Those are clearly 1256. They're separated. But once in a while, you have to tell TradeLog, treat the ETF options as 1256. You have to separate it out. So you got to do some work. That's why a lot of our clients get a little lost on this, and Darren straightens it all out. We have all the 1099s, we run the trade log, and then we parse it to make sure everything goes in the right bucket so you get those lower tax rates where you are entitled to it. It can get a little confusing, right, Darren? You can just jump in whenever you want, Darren.
Absolutely, Bob. Yeah, it does get confusing and intimidating at times, and that's the reason why we do offer the service to help you out. If you want to spend your time focusing on your trading strategy, let us worry about the tax aspect of it.
But with TradeLog, it will identify what can be 1256, but you got to do the work to separate it out by turning on those features in the program. And you're just going to download and match your trades and do all this. Now you can then e-file and attach the 8949 to a paper filed 8453 and hopefully even reduce IRS questions. Again, check out our recording from yesterday where we had a separate webinar on the 8949. No sense duplicating that today. Let's go to the next slide. Let's get more into all this tax treatment stuff, because this is the real gold for you guys on what you're trading. Now, there are key tax treatment differences between securities, futures, options, ETFs, Forex, precious metals, and other instruments. The big picture is it ordinary or is it capital? Can you benefit from the lower long-term capital gains rates, like being part of 60/40? Are wash sales going to apply? This all will make a world of difference on your tax return. Now, different elections may apply. If you're trading securities and you're paying short-term capital gains, which is ordinary rates, and you're getting stuck with that puny $3,000 capital loss limitation, which really hurts so many traders. They get stuck with these huge capital loss carryovers that they can't even carry back on securities. Well, business traders can elect Section 475, mark-to-market accounting, but you have to do it on a timely basis. That's one of the reasons our company got so well known, is we were teaching that right from 1997 when they passed the new rules. And so many clients have saved hundreds of thousands of dollars with that election because they followed our advice. Now, futures traders in 1256, they can elect 475, but then they would give up the lower 60/40 rates. Plus, futures traders can carry back losses 3 years, but only against futures gains. So if you told me, Bob, I traded all of Dan's options last year, and I made money on some, but actually for several years I made a fortune, but then I lost a lot in 2011. Well, the securities ones, you could get stuck with a capital loss limitation if you don't have 475, but the ones that are 1256, we can carry back to get you a refund. A lot of people miss that. A lot of accountants miss that. I'm explaining to you all the differences here. And you can watch this webinar again, but there's a lot of nuances and people miss stuff. So consult with us about it to make sure you can carry back and use your losses. What elections should you do in the future? Do you need an entity in that? Are you handling your accounting and all the separation right? That's why we do a lot of preparation besides just provide the software and the content, because there's a lot to it. Now, the Forex traders can elect out of ordinary gain or loss treatment into capital gains or loss treatment, and in some cases find their way into lower 60/40 tax rates too. That's a whole other area. That's not really Dan's area, so we're going to skip that. Tax treatment. These are some of my major slides on this so that we don't miss the big points. So your securities are short-term or long-term. You hold them for 12 months. Now, unless you're trading leaps, you're not holding options for 12 months. So they're generally short-term. But if you're doing those QCC strategies, you might hold the stock long term. So you remember, your short-term capital gains are taxed at the ordinary rates. This whole thing that's going on in Washington now on both sides of the aisle is a debate over, some of the richest Americans benefiting from the long-term capital gains rate and carried interest in 60-40. Now, Andrew Ross Sorkin from the New York Times called me up for an interview saying that should 60-40 be repealed, because some in Congress called for it. And he interviewed me in the New York Times, and I defended 60-40 for traders because, hey, it's mark to market. If you don't get a chance for a long-term capital gain, you should at least get a chance to get some of the benefit, because it's, you're forced to pay taxes every year. There's no deferral. So, Steve Jobs never paid any taxes on Apple stock. He deferred it forever. But then Warren Buffett on the other side threw futures traders under the bus, and he said it was a tax loophole. So that's the nature of securities, short-term, long-term, and then this dreaded capital loss limitation and the wash sale rules. After all, the IRS doesn't want you to take a loss and then buy it back within 30 days before or after. So economically, you're back in the trade, but you took a loss on your tax return, and then you got right back into the same risk. Now, what do securities include? They include equities, which are stocks, equity options, the stock options, bonds, mutual funds, narrow-based indexes, which are defined as 9 or fewer stocks. There are a couple of those. Single stock futures are really, based on the stock, the underlying stock, so it's treated like a security. Now, ETFs, they're securities, but there's a lot more confusion with them. We'll cover that next. And we said the ETF options can be 1256. Now, futures are different. We kind of covered this slide already. 60-40 rates are 1/3 off, exempt for the draconian cost basis rules. They have built-in leverage, but that's not really margin interest. So there were a lot of benefits, but it is mark-to-market, realized and unrealized, and the money protection issues are a little weaker. Now, what do the futures include? Well, they're really, again, Section 1256 contracts, this first bullet point. They include regulated futures contracts, RFCs. That means they're on Dan's exchanges, all the CME and all those exchanges. They're not off exchange. So that, and we're talking about U.S. exchanges. So this includes all your agriculturals, your financials, your energies, your metals, your currencies. When people talk about commodities, they're generally talking about the commodities future. So all of those are your regulated futures contracts, but it also includes your non-equity options and your broad-based indexes and your options on indexes and your options on futures and foreign currency contracts. Now, when you trade Forex, that's Section 988, ordinary gain or loss. But if you're a trader, you can opt out into capital gains treatment. And if it's a forward in the interbank market, you can squeeze into 1256. That's like a VIP section in the club. You got to get into 1256. That's beyond the scope of today. We have other webinars on that, on Forex. Now, let's say you're in a trade on an agricultural future, and all of a sudden you take delivery of a bushel of wheat. That happens. Well, once you have your handle on the commodity, that's not a future anymore. So all of a sudden you're stuck with ordinary gain or loss treatment, because that's what farmers use. But there are hedging rules and other issues beyond the scope of this presentation for corporate hedgers. It's very rare that a futures trader takes delivery. Now, the broad-based indexes are 10 or more underlying securities, and most of your E-minis, but there are a few narrow-based ones. Now, there's complex treatment for ETFs. Securities ETFs or RICs, registered investment companies, sort of like the mutual fund. You sell it, you're selling a security. So you buy and sell a RIC, a securities ETF, it's like buying and selling a security, and TradeLog handles that way. But there are also commodities and futures ETFs, and the regulators don't allow them to use RICs. So they force them to use they creatively came up with the publicly traded partnerships, like your master limited partnerships with the energies. Bingo, you hear the word partnership, you might get a K1, an annual schedule K1 statement. And that K1 might pass through to you some sales of futures. So you all of a sudden you do have 1256 gain or loss. You got to give the K1 to your accountant. You have to enter it, including your futures treatment, and then Darren figured out, hey, wait a second. Tell him quickly, Darren, what you figured out on the pass-through and the basis. If you're still
run into the publicly traded partnerships, you have to be very careful to look at everything that comes with the K1s, because yes, they're passing through everything that's generated as far as income inside of the partnership for the year on the K1. But when you actually go to sell that actual exchange traded fund itself, your broker does not take into account everything that got reported to you separately on the K1s. So you have to adjust your overall basis, and that information is provided to you in the supplemental statements to the K1 itself. And we had found where some of our taxpayers that actually had a consultation with us were grossly overstating their gain because they were reporting it twice. They picked it up inside of the information in the K1s, and then they forgot to increase their basis for the actual sale of the ETF itself, so they over-reported their gain upon the actual sale of the exchange-traded fund. So just be aware of that. There was actually an article on that in the Wall Street Journal that we were quoted in to take those basis adjustments into account. And if you have questions on that, I'll be glad to have a consultation and go over it with you in detail.
And I know, thanks. And I know there's a lot more of the K1s with 4797 ordinary stuff too. But we're going to focus more on the options, the ETF options today. Thanks, Darren. Now, precious metals are different. Whenever you talk about precious metals, it's almost like your commodity, where if you buy and sell a commodity, you might have a short-term capital gain at taxed at ordinary rates. But if it's long-term, with precious metals, you don't get that lower long-term capital gains rate. You get that collectibles long-term rate, which is currently 28%. That's almost double the 15% long-term rate. So if you're in a precious metals backed, physically backed precious metals ETF, like the GLD, the SLV, it could be a publicly traded partnership, but they don't go for that. They set it up as a publicly traded trust. They also can't use the RIC. So that's disregarded in a sense. So for all intents and purposes, whatever they pass through to you on the K1 is as if you're buying and selling physical gold. And when you sell the ETF, it's like buying and selling physical gold. So there's no 60-40, which is 23% rate. There's no long-term rate of 15%. It's a short-term rate of 35% and a long-term rate, the collectibles rate of 28%. Now, ETF options, we've put a lot of work into this area. The problem is that the IRS hasn't issued guidance, and they've said that they would, but they never did. Many tax attorneys make the case that sales of exchange-listed options on broad-based securities ETFs, as well as on commodities or futures ETFs, should be treated as Section 1256 G3 non-equity options with the lower 60-40 tax rates. So you need to switch that on in TradeLog, which will treat all the ETF options that way, then back out the ones that aren't exchange-listed broad-based securities ETF or commodities, which are just a few, and then you have to attach those line by line to Form 6781. If you're going to do that and you want some help, check with us. If you need an opinion letter on that, if there's some big bucks involved, like hedge funds, come to us for that too. And that's that last bullet point. And read our content on that. We have in-depth tax treatment articles on that in Green's 2012 Trader Tax Guide. Now, foreign futures, they're not U.S. exchanges, so by default they don't get 1256 treatment, but they have said we deserve it. They applied to the CFTC and they got a revenue ruling from the IRS. And the IRS had to give it to them because if they didn't, they would cry foul under tax treaties. So DAX and a lot of foreign, the German futures exchange, a lot of foreign exchanges have it. Our firm actually helped the Johannesburg exchange get that ruling too. Forex spot forwards and OTC options are different beyond the scope of this presentation. And we said the Nadex binary options we believe are 1256. Now, if you want to elect 475, and by the way, we're going to take a little break here before we get into some other things. Let's do some poll questions. We have 5:17, and we're scheduled to go to 5:30, but we can go a little later. We have a great turnout. Stay with us here. Text in some questions on the board. Let's do a couple of poll questions here before we get into some of our other screens, and I'll just leave up the ETF options one. And let me just extend this, set up the poll here. 1 second, please. Okay, here it is. I'm sorry. All right, so our first poll question today. Get ready to vote, everybody. What kind of options do you trade? This is multiple choice, so just check off all the ones that you trade. Equity options, index options, ETF options, other non-equity options, Forex options. Just select, we got 34% voting, so it's time for everybody to hit the button on make the vote. We want to keep this interactive. The polls tell us a lot, and it makes it more interesting to have them. All right, we're up to 57 voting, 57%. All right, I'm going to shut the poll now. All right, we're still getting more voting. Good. 63%, and let me share the results. Interesting results. 80% trade equity options. That's great. So you guys, a lot of money to make there, and you may want to trade stocks too. I should have asked how many of you also trade stocks along with it. So you got to really watch out for the wash sales between the two. You got to watch out and use TradeLog right for the accounting. But there are great strategies there. Now, 58% index options, 65% ETF options. Wow, that's a lot. And, more and more I'm hearing that. So you guys are really interested in our content on getting the 60-40. Very few of you on Forex, as I thought about. So that's interesting. Let's hide that one and ask the next question. Launch this one. Do you use TradeLog for your accounting on equity options? So get your votes in, everybody. Let's see who's using TradeLog right now. In my opinion, if you don't use TradeLog for your 011 taxes, you probably got it wrong on the wash sales. And you don't want problems with the IRS. So get your vote in. We got 60% voting. I'll close this one and share the results. So 9% use TradeLog, 74% no, 17% another solution. Well, if you really need TradeLog, check out that webinar from yesterday. You don't want to run into a problem with the IRS. They'll camp out forever trying to figure out your option strategies. You don't want that. What do you say about that, Darren?
I agree with you, Bob.
We don't want clients getting it behind the ball on the accounting. Let's go to the next question. Do you treat some ETF options as Section 1256 contracts? So are you doing what we said is possible? Or have you missed the boat on that so far? So we've got 20%, 25%, 29%, 33%. Let's get all the votes in here. Don't be bashful. This is anonymous. Get your answers in here so we can see if you know about it. Maybe you know about it and you're just not comfortable with it, and we'll get you comfortable with it. So let's close the voting on that one now and share the results. 14% of you treat ETF options as 1256 contracts, but 55% said no. And 31% said not sure. Now, I bet you most of you are trading the types of ETF options that qualify. Most of them do, but some of them don't. So this is a situation where you just got to get the content, get comfortable with it. A lot of times your local accountants, they'll balk at stuff that they don't understand. And maybe you're not getting the services that you need. Let's hide that one and go to the next question. Do you think you qualify for trader tax status? We didn't go through all the golden rules, but based on what we discussed, are you the type of options trader where you also trade other things and you're doing it 4 days a week? You're making a lot of trades, or are you really just making your trades 1 or 2 days a week? So let's get the votes in up to 56%, 57%. I'll close the vote in just a second here. All right, let's 61%. Oh, it's still voting. Good. Get your votes in now. We've got a good turnout in the room. Let me close it and share. 31% think you qualify. 43% don't think you qualify. 26% say maybe. You know, that's what I would expect. Now, some of you 43% may qualify who said no. Some of the 31% who said yes may not. And the same goes with the 26%. But again, there are options traders who don't qualify. You know, then you take advantage of tax treatment. You take advantage of the investment expenses that you can have. You try to get your AGI deductions like health insurance and retirement plans and other activities. You don't push the envelope. You play the hand you're dealt. Let's hide that one and go to the, I think I did share that one, I believe, the 3146. Okay, hide it and go to the next one. This is the last one, and I'll save actually this one because we didn't cover this topic yet. Let's go back to the presentation. We're all going to run a little late today. So if you want that 475, you could do it for futures too. You could do it for everything. But if you have a new entity, it's within 75 days of inception. We have clients that form a new entity with us now. They trade everything in the entity. If they lose a lot of money in 75 days, we elect 475, take this huge ordinary loss against any type of income, and we can have a do-over with a new entity. The entities are real simple, like a husband-wife general partnership. So learn about 475 in our content and all these different elections, and we can help you through all that. 475 is a big topic, and I don't want to shortchange it. It's on this slide. There's an election statement. You have to file a 3115. But if you're a new entity, it's within 75 days, and it's internally. Let's go to the next slide. We don't cover Forex too much. So on the trader tax status, it applies to any type of trader, securities, futures, options, ETFs. Learn about how to qualify on our site, in our golden rules, in our guides. You can claim it for 011. You can use it for 012. You don't have to elect it. You claim trader tax status. Those tax treatment elections you have to do in advance, some with the IRS, some internal. You need to understand the differences. It's in our content. So if you say, Bob, I qualified for 011, my accountant missed it. He also messed up my trade accounting. I could have had 1256. We can fix it all. We can file an amended return, put in a Schedule C. If you're still on extension for 011, we can take over and fix it all. We can add all the business expenses. We can make sure all your trading gains and losses are in the right forms, in the right manner. And we can decide on an entity for the rest of this year. Now is a great time to form an entity. We have a wonderful webinar on the best entities for traders. What was this trader tax status all about? It's about these business expenses. They're unlimited for sole proprietors. Their business deductions, they're a lot better than restricted investment expenses. Home office, huge deduction for traders. It's not a red flag. Section 179, 100% depreciation. You got 6 monitors, 2 computers, write off 100%. Squeeze your educational expenses into startup costs. Get a $5,000 expense the first year and the rest over 15 years. Go back 6 months for that. Margin interest, business expenses, all your courses and everything you do with Dan. If you're a business trader, the day you go to Dan, everything you pay for the education will be a business expense. If you go to Dan to learn about trading and you're not a business trader yet, it's either going to be a non-deductible investment expense under this last red point, IRC 274H7, or you're going to squeeze it in to startup costs, Section 195, and start your business within 6 months. So if you pay Dan some money and then you learn how to trade and you qualify in 6 months, you can still squeeze that into your Section 195. There's a lot of misinformation out there about education, startup expenses, and how to handle it. Some people are way aggressive and do it wrong. We will show you how to do it right. So all your expenses can be business deductions, but you got to hit your numbers for your frequency of trades. If you fall short, you're going to be an investor. That excludes home office. It excludes the pre-business education and startup costs. Again, if you get it going in 6 months, you can get back those startup costs. But if you never get it going, it's excluded. Investment interest is restricted to investment income as an itemized deduction. Investment expenses are only allowed in excess of 2% of adjusted gross income. You make it that far, then the AMT knocks it out if you're subject to AMT, alternative minimum tax. So when you go to Dallas and Vegas to see Dan and me on these seminars, if you're a business trader, you're traveling in business class tax-wise. It's all deductible. If you're not a business trader, you're stuck in tax coach. It's not deductible. If they flatten the tax code in tax reform, it's these guys that get flattened. Those itemized deductions, the business guy still gets the golden goose. So it's tricky on these startup issues. Check with us about it. Don't fall for any of these false promoter schemes promising you, a C Corp, LLC, deduct it all. Hogwash. You'll get into big trouble. Now, if you're a business trader, or even if you're an investor and you don't want to file that Form 8949, you should be setting up an entity. Take that webinar on the best entities for traders very quickly. This is for your business traders now. One simple pass-through entity is all you need, not two. You're going to pass the taxes to your individual return. You're not going to pay taxes on the entity level. The entity is going to make trader tax status look a lot better, but it's going to open up all these new elections to you again, all over again, fresh now. You get a clean slate, clean start right now, mid-year. You might have missed the boat. Hey, you get the boat again. There's a new boat, your own boat. You can do these AGI deductions, or retirement plans, health insurance premium deductions. You can't do it if you're a sole proprietor trader. A sole proprietor trader can have business expenses, can make elections, but they can't do these AGI deductions. So married taxpayers generally should use husband-wife general partnership. Keep it simple. Least costly. No state filing fees. You can move states. If you're single, you don't have someone to be your partner, well, then you set up a single-member LLC with an S-Corp election. We make sure it works for you in your state and locale. Again, even if you're not a business trader, you might want to have an entity to avoid the 8949. Now, if you're a business trader, we're almost done with the slides, and then we're going to questions. So it's 5:30 now. We're going to go 5 or 10 minutes late. So stick with us if you're interested in learning more. We have retirement plans, self-employment tax, a couple of other key points to cover. We still have close to 200 of you active in this session, so let's keep going with it. So you set up the entity so you can have a retirement plan. That individual 401k plan is the best plan for traders. It combines the 401k element with a 20% profit sharing plan. You can save over $17,000 a year, a married couple, with this type of planning. Save another $10,000 or more with the trader tax status. And then with the tax treatment, save tens of thousands more. You're talking about real money. Now, trading gains are generally not earned income. That's a good thing, so you don't owe self-employment tax. Now, if Dan has some friends who trade futures and they're members of the futures exchange, they have self-employment tax. But if you're not a member of the exchange trading futures, you don't have self-employment tax. That's fantastic. The self-employment tax is 15.3% of the base amount. It's 2% less with the payroll tax cut. But it really adds up. It's a whopper. Now, you set up an entity. The entity pays you a small fee. That's earned income. That triggers some self-employment tax. But on the flip side, that retirement plan deduction saves you a lot more. So you start off with no earned income. And then you work with Darren or yourself and you say, hey, I want to save some more money and I'd like to contribute to my retirement plan. And then I want to trade my retirement plan tax-free until I retire. I want to get the best of all worlds. I want to save for retirement. I want to trade my retirement plan tax-free. And I want to put thousands of dollars in my pocket net. Bingo. That's what this strategy does. You pay a little self-employment tax. You deduct half of it. But that self-employment tax is 13.3%. The income tax savings might be at 25%, 30%, 40%, depending on what you trade, what your marginal tax bracket is, and what state you live in. But bottom line, there's always savings. And if there's not, we don't do it. But there always is. Now, in a bad year, you might want to convert your retirement plan to a Roth to check out. If the Bush tax cuts expire this year and you're in a high bracket, you might want to cash in your retirement plan, convert it to a Roth, pay the taxes. There's no penalty for the conversion. And then you're going to trade your retirement plan tax-free for the rest of your life. They can raise taxes all they like. It won't affect you on that account. A lot going on with retirement plans. It's a good area. We're really set up for that. So you can run all this tax planning with Darren on the Roth and more. Now on the self-employment tax, your online traders are exempt. Now, keep in mind the health care law changes for next year. They're ushering in these Medicare taxes on investment income, on incomes over $250. So they're trying to whack investment income with some of these Medicare taxes for the first time, whether you pay yourself a fee or not. So you got to watch out for that next year too. Because to date, your trading gains, your investment income has been free of entitlement taxes, you know, the FICA and the Medicare. But next year, for the first time, they're breaking the Chinese wall on that and hitting the investment income with the Medicare tax. Now, your futures trader, if you're a member of an options or futures exchange trading 1256 contracts, so if you're a member of an options exchange and you're trading index options, you got to worry about Section 1402I, self-employment tax. Now, if you're an investment manager or a prop trader getting a 1099 miscellaneous, you got to worry about self-employment tax too. If you join the CME as an electronic corporate member, an ECM, that's a limited type of membership. We don't think SE tax applies. Now, we don't really have time to go too much into the current issues for traders. Bush tax cuts are expiring. You know, Democrats just said, let them expire, and then we'll just offer a tax cut next year and navigate around the pledge, the tax pledge that way. They're not going to settle this, I don't think, until the lame duck session at best. And if President Obama wins, he's the second term. I see him sticking to his guns. That may happen. They're playing chicken. This is going to be very tricky. So that's going to drive a lot of tax planning, and you need to do this year-end planning. We're really good at it. So do all this year-end planning with us. We have a lot of content on our website. Run the trade log. See if you have wash sales. If you have a wash sale, break the chain. Don't get back into the same symbol, including the option. Trade a different option so that it isn't a wash sale. Don't wait to get a nasty surprise after year end. Plan it before year end. Stop trading now individually. Set up an entity. Break the chain on the wash sales that way. We're all about getting you back on track. You missed the boat, we'll get you another boat. So let's get some questions on the board and see how we're doing here. I see Dan and Darren are still active. I'm going to look at some questions. Dan and Darren, if you wanted to jump in while I do that, go right ahead. And I'll leave up actually the year-end planning slide a little bit.
Yeah, that was a fantastic presentation. I learned a lot listening to that, and I hope everybody else did as well.
Thank you so much, Dan.
Sure. And, for those of you who are watching this, if you're interested in group coaching, I'd like to give you the website for that, markettaker.com/group-coaching. I invite you to enroll in that, and I'm going to throw in a free book for the attendees here today who are there. Maybe I can type that in here, and we can share that with these guys, huh?
That's great. That's great, Dan. I really appreciate it. And we have the webinar you're going to do next on the 24th, next week, on Tuesday. And we're going to send everyone a bulk email invitation to that, and I know you'll send it out as well.
Sure will.
And we have some good questions as well. People can text in your questions. We'll try to get to a few of them here because I know you took your time. A lot of you stick around to get the answers. And I'm looking at questions now. My panelists may not be able to see them, so I'll read some here. The recording will be up tonight. Sorry if we had relative differences in the mic volumes. Does the IRS treat the iron condor trades 4 legs as one trade? Well, I did cover that, Kuyong, that we think you probably can count each leg separately because you do put them on separately, you monitor them separately, put a lot of work into each one of those legs. And does the wash sale rule apply to day trading binary options? Well, I thought that the binary options could be 1256. Once something is 1256 mark to market, it's exempt from wash sales because when you market to market year end, there's nothing to defer. You can't defer a wash sale. It's impossible. It's all realized. It's economic reporting. Does this cover the options on commodities? Yeah, we talked about all types of options. Now, we talked about the ETFs too. The ETFs are different from the ETF options. We went through that all. Some of these questions were before I got to these points. Now, Kelly said, if I trade some options inside my IRAs, do I have to worry about some issues? Yeah. If you have a taxable account and a IRA, and the IRS rule says you have to look for wash sales that you trigger from a trade in your IRA. So you sell something in your taxable account, you buy it back within 30 days before or after in your IRA. You could trigger a wash sale, which means you can't get that loss in your taxable account, and the benefit of the loss could be wasted in your IRA. You have to be careful with that. TradeLog will have a really good update on that next year, and we go about some ways to try to deal with that for this year. Talk to Darren about it. What kind of record keeping should be done for continuous business activity such as education, research, testing? Keep a great daily log. Save your cash. Send yourself daily emails. That's like time-stamped. Really, have a business plan. Stay organized. Really document what you are doing. Bart, do you need one trade a day? Yeah, we want to see one trade executed 3 to 4 days a week because the IRS told Holsinger that 2 days a week was not enough. Now, here's the thing. Paoli tried to cheat the tax court saying he was a business trader. He only made 3 trades in December. It was a joke. This is the problem with tax court. Some really ridiculous cases are brought to tax court by frivolous clients who don't have proper counsel, and then they kind of mess it up for the rest of us. So the tax court said, Paoli, you're lying. We don't believe you worked every day and then made 3 trades in December. So they resorted to the frequency of trades. Well, we've gone full circle. We're telling the court now, hey, Paoli was a liar. Our clients are not. They're documenting their continuous business activity. This frequency of trades was not the original standard. It was a backup standard. Other businesses don't have to sell a car every day off the lot, but they go and try to sell a car. So, you know, trading doesn't have to be like a restaurant. There could be really big risk options trades that are monitored daily but not executed every day. And I also have the hotel analogy where I explain. Guy checks into a hotel on Monday, checks out on Friday night. That's 2 days of front desk duties, but the housekeeping worked every day the person was in the hotel. So it's still open for business. Phil, are options trades equivalent to trading the underlying equity? Well, for wash sales, they are substantially identical. Brokers only use identical, same symbol, but you, the taxpayer, has to use substantially identical. TradeLog does that, one of the only programs. If you are an equity trader, do you still have to qualify for trader tax status? Absolutely. A lot of traders don't qualify. David, what is a wash sale? Sell a security, buy it back 30 days before or after. When you sold it, you took a loss, but then you got right back into it. The IRS says, don't take that loss. Add that loss to the next position. We don't want you to try to front run your losses on your tax return. We want you to, it's their way of having more of an economic reporting. And boy, have they messed up the code with wash sales. Yes, a lot of people had to leave. The recording is up tonight. I just gave the example of a wash sale. Yes, TradeLog works great with Lightspeed customers. We do a lot of work with Lightspeed. We power their tax center. Yes, check out the 8949 recording. It's on our website. What you want to do is go over to our website. I just brought it up here. I had Dan's site up a second ago. And you see up on top right here, you click on webinars. And then you just scroll down and you see the free download of yesterday's webinar. And I'll also put that onto the questions, the link right there for you all. Let me go back here. If you're still with us, stick with us. We're getting to a lot more questions here. All right, and then someone's asking about the TradeLog. So what you do is you come to our website here, and you go to Home, and then you scroll down on the home page. In the bottom, you see TradeLog. Then you click on the TradeLog website, and you see all the supported brokers, how they work with different brokers, exactly how you do all the downloads, which you can always do in Excel and CSV and Quicken also. But you do your downloads directly, and you see all about the 1099B reporting problems, how all these brokers are messing it up, on how they have known problems that we're waiting for corrections. So back to our website and then the webinar page. Let me go back to the questions here. And Dan probably will have a link to the recording on his website too. Just give me some time here as I'm reading the questions. Yes, you get your ETFs, you get your K1s for your commodities and futures ETFs like your U.S. oil or your precious metal back ones, not your securities ETFs. Those are RICs. You're not getting the K1 there. Now, everyone's got a symbol. They always ask us, well, we just Google it. We see if it says, ProShares Trust, ETF, we could tell right away if it's trading on one of the securities exchanges, if it's an ETF. But if it's an option on the ETF, that's when we got a great shot at the 1256 treatment. And then someone was asking about the the covered call with the tax arbitrage. We did have that slide. And about the straddle or hedge. And we'll get more into that in the future, and you can always work with our tax attorney on that. Yes, states like California follow the IRS lead, but they may have differences on NOL, like California froze NOL carrybacks. They let you carry it forward, but there are limitations on using it. It's important to understand how states differ, but generally they piggyback the federal rules, especially for trader tax status. So Vincent asking about the golden rules, just go to our website, click on like Trader Tax Center right there, then you click on trader tax status, and the golden rules are right there. But then what you want to do is go to our Green's 2012 Trader Tax Guide at the bottom of any one of those pages, and that's on promotion now. This is what you really all need. You need these gold packages and other packages of all the guides, and they're on promotion now. I have to add the platinum package there too with the webinars. All right, so we can't get to all the questions. Let me see how many of you are still here if you want to go a little later. We still have a big turnout here, but it's probably better to end it now because the recording will be too long. Email us your questions. Come to our next sessions. Our consultations are on promotion now too. They're 20% off just for these summer months. So just go to our homepage, scroll down. There's a lot of free stuff. And then what you do is check out the tax preparation, check out the consulting, and that's on promotion. So you can consult with me for 30 minutes for $125. You can consult with our tax attorneys too. We can do that TradeLog accounting for you. Don't file an 011 return if it's wrong. Get with us. And if you want an entity for this year, that's on promotion too. After a consult, it's just $500 for the upgrade. That's a great price. So I want to thank Darren Neuschwander, my partner and co-managing member of Green NFH LLC. Darren is fantastic for tax prep and everything you need there. I want to thank Dan Passarelli so much for sponsoring today's session, inviting your users. Wow, when you send out an email, people come. They listen to Dan Passarelli. I'm really looking forward to next week's webinar where you teach us all how to trade options, because I know there's a lot of money to be made there. A lot of smart traders are trading options. We know that from looking at our clientele. Give us a call. Mindy's great. She answers the phone. If you have to leave a message, she'll get right back to you. Send us an email. We'd like to work with you. We'd like to help you. And thank you all.